Hey guys, in this video we're going to talk about one very important condition for your profitable trading. If you don't follow this condition, it's unlikely you'll be able to trade profitably. And that condition is the size of the spread. And if you're skeptical about this concept of spread size and don't see the difference, then this very video will help open your eyes to the existence of this super important issue. Because in about 70% of cases, the size of the spread will significantly worsen or improve your trading results. And in this video, I will explain and show you with practical examples exactly how the size of the spread affects our trading results. So let's get started. So what is a spread? It's our fee to the broker for making trading transactions online. To put it more like Wikipedia would, a spread is the difference between the buy price and the sell price. That is, the prices at which we can buy and sell assets on the broker's platform. We can see for ourselves that on the platform, the buy price and the sell price are always different, and the difference between these prices is the spread that the broker charges as a fee for their services. So guys, there are two types of broker fees. The first type is when the broker doesn't charge us a fixed commission, but instead includes their financial interest, that is, the fee for their services, into the spread, meaning the difference between the buy and sell prices. This is the worst option because the broker isn't limited by a clear commission and wants to earn more, so they charge us a lot on every trade, but hide their interest within the spread. This spread can be very large, which makes it difficult for us to trade. The second type of broker fee is when the broker charges us a fixed commission for each trade. This is a more advantageous type of fee for us because the broker doesn't change the spread and keeps it market-based and narrow, because they don't embed their financial interest into the size of the spread. Now listen to me carefully. You can use a super profitable trading system or a mega cool trading bot. Your results can end up much worse than everyone else's. And all simply because you're using a trading account with a large spread. The size of the trading spread plays a huge role and has a major impact on your trading results. So, guys, before you start real trading, make sure you have good trading conditions. I mean, your type of trading account should be one where the broker charges you a fixed commission rate and gives you minimal spreads for all trading assets. This is exactly how you can expect maximum efficiency from your trading. Now, I'll explain and show you in practice why the spread has such a strong impact on our trading results.
So guys, you have two platforms open in front of you. I've placed them side by side so that it's easy to compare them. One platform is the IC Markets broker platform, the Australian broker IC Markets, and the account type is raw. This is an account with a tight market spread. Here is a platform with an account opened at Vantage International Markets, which currently has a standard account type. As I mentioned, these two accounts differ not only because they are with different brokers, but also because here, this is a standard account where the broker includes their profit in the spread size. This is the ask line and this is the bid line. The distance between the bid and ask is the spread size. This is the broker's profit. So, Vantage Broker has put its disproportionate appetite and desire to make money into this large spread. And as we can see, it's just huge. And on the same asset, and you can see these are exactly the same quotes, it's the Australian dollar against the Canadian dollar quotes. We can see that at IC Markets, the spread is very thin, just a tiny line. And the ASCII line is at a very small distance from the BAD line. But here the ISK line is at a huge distance from the BD line. So if we make a buy trade right now, the order at IC Markets will be placed here. And at Vantage, it will be here. In other words, we get less favorable buying conditions with the broker where the spread is wide open. Where the account is opened with standard conditions. So here, I'm showing you why it's more profitable to trade this way. Because our buy order will be here at IC Markets, giving us more room to move upward, while with this broker, the order will be here and the upward potential will be much less. Now let's imagine that for clarity, I'll add an indicator so you can understand what I'm talking about. For example, a trend indicator, Bollinger Bands. All right. And let's also add the Bollinger Bands trend indicator to the second platform. Let's open the navigator, select indicators, and choose trend. And here we'll find Bollinger Bands. So we had 120 there. All right, let's go ahead and reduce it now. All right, everyone, I placed the two platforms side by side again, and I'll give you a clear example. For instance, if I make a trade on a price rebound from the lower Bollinger Bands indicator level and then close that trade when the price touches this central moving average level, then the total distance between the opening and closing levels will be almost the same as the size of the broker's spread. And as a result, I won't have any real profit, because the spread will effectively eat up all the potential profit points right here. But if I open a trade on this platform right here, at the moment of the touch, right now is the moment to open the trade and close it at the central level, then the spread here is very small and it won't prevent me from locking in a profit between these two levels. Do you understand? This spread size eats up all my profit here in this range where I wanted to trade. But this particularly small spread size provides me with a good deal of room to maneuver effectively, which is an ideal distance for my scalping approach. And so now, let's imagine for a moment that your entire scalping system doesn't bring you any profit at all, because you have a huge spread, an enormous spread that eats up all your profit on every trade. You trade and don't make any profit. In fact, you're in the red. You write an angry letter to the developer saying that you bought the system, spent a lot of money on it. Where's the profit? The developer can't understand what's going on. Well, the system brings profit to everyone else, but you're in the red. You're stuck in one place. You can't make money, and you blame everyone but yourself. My friend, believe me when I say it is significantly more advantageous to choose a trading account that features a very tight spread, allowing you to secure a profit, rather than putting yourself through all the stress and eventually losing your deposits on demonstrably bad trading accounts. Now, to provide a concrete example, I am going to show you something else of interest. This right here is the well-known MyFXBook website. From this homepage, we can proceed to the You'll want to go to the broker section, and once you are there, take a closer look at the specific forex spread size. Okay. So in this section, we can select all brokers. And then you'll want to compare the spread size for each individual asset. Now, it's probably not necessary for every single one, since there are a huge number of assets to choose from, but that detail isn't crucial. To give you an example, let's consider the Australian dollar against the Canadian dollar. We can then go through all of the available brokers and check the specific spread size for each one. So, for instance, right at this moment, Pepperstone is showing a spread of 0.3 pips. Let's say Go Markets is at 0.4, almost the same, okay? That's a good spread. We move on to active trades, and what do we see? Here it's 2.1, which means this spread is 7 times larger than that one. But we can also see that there's XM, a broker with a spread of 1.2, which is 4 times higher than Go Markets. At the same time, when we opened the platform, I showed that the spread was about the same, or even lower than that of Pepperstone. Go Markets is generally considered a leader in scalping because it has super tight spreads, and it's my favorite broker, because I trade best on its platform. And all my trading bots perform best as well. And for example, let's say we go further down. OctaFX, it offers a spread of 3.0, while Pepperstone, for example, has 0.3 and IC Markets has 0.1. So here, OctaFX's spread is 10 times higher than that of IC Markets or Pepperstone. So we can simply take a look. It's important to remember that among the vast array of brokers, there are certainly some that operate with significantly higher spreads. Well, almost 3. There are brokers out there who will simply destroy your trading results, and you'll be sitting there wondering, what am I doing wrong? It's because of their excessive appetites and thirst for profit, their desire to charge you for every single trade, and it doesn't matter what the conditions are. The broker doesn't care what results you get or what outcome you achieve. The only thing that matters to them is their quarterly results, the profit they can share among the management of that broker. So, let's get back to trading platforms. These two differences, this one and that one, at a broker will give you the opportunity to earn here with a tight spread, and here with a wide spread, you'll be taking losses. Okay guys, to fully cover this topic, let me just show you what types of accounts you should choose. Let's say I'm currently on the Vantage Broker's website and I want to open an account. Look at how brokers set things up. This is true for any broker. When you want to open a trading account, by default, they immediately set you up with a standard account. That's exactly the account with a huge spread, designed to strip you to the bone. But we're smart people. And now you know that the good account is the raw account. It's also called an ECN account. This is an account with a commission, but with a tight spread. Yes, you'll still pay the broker, you still pay for every trade, but less. And secondly, your spread will be very, very narrow, just this tiny. And you'll be able to lock in profits very conveniently and use any scalping strategies without restrictions. Because with a tight trading account, you have a lot of room to maneuver. But when you have those outrageous spreads, you won't be able to do anything. So, choose this raw account. Different brokers call it differently, but in general, it's either raw or ECN. And also check the spread size. Sometimes brokers provide clarifications for certain accounts. Here, the broker doesn't provide any clarifications at all, you just have to figure it out yourself. I just know that raw and ECN are good accounts for trading. So you need to choose raw or ECN. And it's important to understand that only in this way will you be able to ensure genuinely good trading conditions for this specific kind of scalping strategy. And not even just for scalping, but for intraday trading when you make 10 to 15 to 20 trades a day. The spread size, of course, will also matter. So, open a raw or ECN account and secure good trading services for yourself.